Can you deduct your out-of-pocket medical expenses on your taxes? Most people cannot, even though it's listed as an option. I'll explain why. That and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. One of the common questions that we get from people, in fact, as we do financial planning and then prepare a lot of taxes for folks, many of them will provide receipts and CVS, records and all of their out-of-pocket medical expenses, and then with the question, well, I get to deduct this on my taxes, right? Or do I? Sometimes we just get the blatant question, can I deduct the out-of-pocket medical expenses that I have on my taxes? Very rarely, but yeah, it happens. I wouldn't say very rarely. It happens where people just assume I can, right? Because yes, you can. It says you can deduct out-of-pocket medical expenses on your taxes. What they're not aware of is all of the limitations, which unfortunately lead to most people cannot. And the circumstances align in such a way that it's very, very few, even though this is listed as one of the possible deductions that you can take. Now, before I explain why that is, I'll give you the good news, and that is most people have their health insurance through their employer. If you're still working, you're not on Medicare yet, you've got your health insurance through your employer, and when you're paying for your health insurance through your employer, they are, I'm sure, running it through a type of plan, a cafeteria plan, such that the monies that you pay for your insurance premiums are actually going through pre-tax. For most people, they are. But it's just the out-of-pocket, the deductible, the prescription, those sorts of things, or even out-of-network. Those expenses, are they then deductible? This is why, because of the challenges I'm about to share, the limitations, that's why we're such big advocates and believers in the health savings account. Not because it's a perfect health insurance plan. Yeah, it actually has a high deductible. But the fact of having a qualifying high deductible health plan where you're able to contribute to a health savings account means most, not all, most of the out-of-pocket expenses that you have would be tax-free because you're using your health savings account, or you're contributing to your health savings account, making it such that it would be tax-free. All right, so there's two primary reasons why most people, even though we hear from the IRS that you're allowed to deduct out-of-pocket medical expenses, here's the two reasons why the vast majority don't. And the first reason is it's an itemized deduction. It's an itemized deduction. You can see here the Schedule A, which is itemized deductions, and most people do not itemize. Most people, it is better for them to get a standard deduction. The itemized is, and we do this for all the clients that we serve, we actually list out all their itemized deductions and just see, okay, which one's better. That's what you should do, not just assume one is better than the other for most instances. Out-of-pocket medical expenses is one of the items. So are state and local and property taxes, but up to a cap of 10 grand. So are mortgage interest payments, and so are charitable contributions, charitable donations to qualifying entities. So if you list all of those things up and that is greater than the standard deduction, then you're going to itemize. But most people, and I think it's 90% or a little north of 90%, that list is not greater than the standard deduction. Therefore, the standard deduction is what is better for them, and they don't deduct their medical expenses. That standard deduction for married couples, $27,700, so $27,700 in 2023. It's going up about to over 29 grand in 24. So getting harder even to itemize because that standard deduction is higher. Okay, so you might say, well, no, I do itemize. So if I itemize, does that mean I'm going to be able to benefit from all my out-of-pocket? No, and that's the second reason why so many people don't get this tax deduction is the only amount that counts on your itemized deduction is what's above 7.5% of your adjusted gross income. So like thinking of the other itemized deductions, charitable contributions. Well, any charitable contribution you make to an eligible charity counts on your itemized deduction. You don't have to get above a certain level and then it starts counting. Well, that's how it works with medical expenses, out-of-pocket medical. You have to get above a certain level before it will even be added to your itemized deduction. So if we look and say, well, okay, if your adjusted gross income is $100,000, then all of your out-of-pocket medical expenses up to $7,500 won't help you on your itemized deductions at all. They don't even count. It would be anything above that $7,500 that would start adding to your itemized deductions. And therefore, because of that limitation, most people they're not eligible. It doesn't work. If you are in the awful circumstance of, no, we've got a medical emergency and there is a lot of out-of-pocket, and I mean a lot, and primarily these circumstances didn't have health insurance or are in a long-term care facility or need long-term care and there's no insurance and you don't have insurance for that. If that's you, the challenge is, and this is why this is so frustrating, the challenge is, well, if you've got all of these out-of-pocket costs, all of these out-of-pocket expenses, where are you getting the money to pay for them? Your income is likely high. And the higher your income, the higher that threshold becomes. It's 7.5% of a higher number, right? And therefore, it's just the way this is calculated, the way it is structured, it's almost as if they're structuring it in such a way that essentially no one would benefit. And that's not true. Very few people do, but it is very, very few and very frustrating. All right, so your takeaways. If you aren't in that scenario, then you got to work with your CFP to explore, well, what are the ways? Are there other interesting or creative ways that your out-of-pocket medical expenses could be, tax-free or tax-deductible, or ensure that you're taking advantage of all of those potential opportunities or any other tax-saving deductions that are available to you? So this would be, do you have an HSA plan? Are you maxing that? And so on. So work with your certified financial planner on that. But then on the other side, the takeaway is, if you're listening to this saying, no, we are in a health emergency. We have a lot of out-of-pocket expenses. You're going to want to do the tax planning work. Work with your CFP. See if there's a way you can find options to get your adjusted gross income lower so that the threshold is not as high and you'll be able to deduct as much as possible. That's the proactive planning work that you need. So work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.